Welcome to the Financial Evangelist Podcast, your source for the latest in economics, crypto, and everything in between. From market movements to blockchain breakthroughs, we cut through the noise and bring you the facts, fast.
Hey everyone, and welcome back to the Financial Evangelist Podcast. You know the drill. Make sure you hit that subscribe button so you don't miss any of our future deep dives. Today, we're diving into some pretty interesting stuff, China's economic situation. And to be honest with you, from what I've been reading, it's not looking too good. We're seeing some analysts ringing serious alarm bells. So to help us figure out what's actually going on, we're going to take a deep dive into a couple of sources. One's a video from Eurodollar University, and the other is one from Stephen Van Meter. Hopefully by the end, we'll all have a better grasp of what's happening in China and, more importantly, what it means for investors like you.
Sounds good to me.
Well, something that's really stood out to me, and I think kind of sets the stage for this whole discussion, is that there are multiple indicators, like from different parts of the economy, all pointing to the same thing: trouble in China.
Yeah.
It's not just one isolated issue. It feels more like there's this, a confluence of factors that are all coming together at the same time.
Yeah, I know what you mean. And it's definitely caught my attention too.
So to kick things off, I think it's worth looking at what the Eurodollar University video was talking about: deflation in China. They highlighted that consumer prices actually fell year over year in February. Now, I know what you're thinking. Falling prices, that sounds like a good thing, right? But it can actually be a sign of some deeper underlying problems in the economy.
Right, it's not always so straightforward.
What do you think about this deflation thing in China?
Well, you're right. Deflation isn't always a good thing, especially when it's happening at the same time as something like a decline in imports, which is also happening in China. This is starting to paint a pretty worrying picture. I mean, when we talk about imports, it's not just finished goods. It also includes all those raw materials and components that are needed to fuel China's manufacturing engine. And this decline suggests that demand, not just domestically, but potentially globally as well, is weakening. Basically, factories are bracing themselves for a slowdown in orders.
It's kind of like the canary in the coal mine, right?
Yeah.
Factories slowing down. That's a bad sign, a sign that the economy could be heading for a recession.
Yeah, I'd say so.
And it's not just the imports thing. The Eurodollar University source also talked about how China has been trying to stimulate its economy. I mean, they've been spending huge amounts of money, massive government spending. But it doesn't seem to be working this time. It's not having the effect they were hoping for.
Yeah, that's right.
So what do you make of all these stimulus efforts? Are they just throwing money at the problem without actually addressing the root cause?
Well, it's complicated, for sure. I mean, what the video argues is that the stimulus efforts, even though they're huge, aren't really getting at the underlying problems, the structural issues that are plaguing China's economy. They bring up this idea of a silent depression, which is basically saying that the global economy never really recovered from the 2008 financial crisis.
Okay, silent depression. That's a pretty thought-provoking idea. Can you expand on that a little bit? Because I think it's really important for our listeners to grasp this concept.
Sure. The idea is that global demand never really bounced back after the 2008 crash. So economies like China's, which are heavily reliant on exports, well, they were going to run into problems eventually. It was only a matter of time. They built all this growth on the idea of selling to the world. But in reality, the world wasn't buying as much as they used to. And then the pandemic hit, and with all the economic disruptions that came with it, well, it only made this underlying weakness in global demand even worse.
So it's like this delayed reaction to the 2008 crisis, like a slow-burning fuse that's finally reaching its end.
Yeah, kind of.
Scary to think about, especially for anyone who's invested heavily in Chinese markets.
Right. There's definitely reason to be concerned. And what makes this even more interesting, and maybe even a little more concerning, is that China's not the only one feeling this weakness in demand. Remember the Van Meter video we mentioned? Well, it focuses on the U.S. and it paints a very similar picture. Worries about a potential slowdown are starting to bubble up. He actually talks about how Trump's been meeting with all these CEOs who are getting more and more anxious about the economic outlook.
Okay, so now we're switching gears a bit. Let's go from China to the U.S. What's Van Meter saying about the economic situation over there?
Well, Van Meter's point is that even in the U.S., which we often think of as being economically strong, there are all these anxieties brewing about a possible slowdown. And get this, part of what's making these CEOs nervous is the impact of Trump's own trade policies, especially the tariffs.
Oh, wow, that's interesting. So even with everyone talking about how strong the U.S. economy is, it sounds like there are some cracks starting to show.
Yeah, that's one way to put it.
What exactly are these CEOs worried about?
Well, like I mentioned, they're not happy about the tariffs, but also things like rising prices, which are squeezing consumers and could lead to a decline in demand for goods and services.
And of course, when demand falls, businesses start tightening their belts, which can mean job cuts.
Right, and it just spirals from there. People have less money to spend, so demand falls even further, and it becomes this vicious cycle.
Van Meter actually draws a link between falling stock prices and rising unemployment. He says the CEOs might actually be using the stock market as a leading indicator for when they should start laying people off.
Wow, that's fascinating.
I know, right? It shows just how connected the financial markets are to the real economy. Van Meter's argument is that all of these things together, the weakening demand, the rising prices, and these increasingly nervous CEOs, could push the U.S. into something called a stagflationary recession.
That's a scary thought.
I know. I've heard that term stagflation a lot lately, and it does sound pretty ominous. Can you explain exactly what stagflation means, and why is it so worrying?
Sure. Stagflation is basically a combination of economic stagnation, meaning slow or no growth, and high inflation. Prices keep going up, but the economy isn't expanding. It makes it super hard for businesses to do well and even harder for people to afford basic things because their money just doesn't buy as much anymore.
It sounds like a no-win situation.
Yeah, pretty much.
And the thing is, both of these sources, even though they're looking at different parts of the world, China and the U.S. are basically highlighting the same themes. Concerns about a possible global recession, worries about the effectiveness of traditional stimulus measures, and this underlying weakness in global demand.
Yeah, it is interesting how these themes seem to be popping up everywhere.
And this leads us to another really important point that both sources brought up, the psychological impact of all this uncertainty. It's like when CEOs get nervous and consumers start to worry and everyone's waiting for the next bad thing to happen, it can almost become a self-fulfilling prophecy.
It can definitely have an impact on how people act and the decisions they make.
Reminds me of that quote, "Markets can remain irrational longer than you can remain solvent." Fear can actually be a powerful economic force.
That's true. Fear can really paralyze people and slow down economic activity.
So where do we go from here? Are we all doomed? Is a global recession inevitable?
Not necessarily. I mean, economic forecasts aren't perfect, and they definitely don't guarantee anything. These indicators are definitely worrisome, but they don't necessarily mean a recession is a sure thing.
So there's still hope.
Yeah, but it's still important to be aware of the risks, and it's really important to take steps to prepare, just in case.
You're right. Preparation is key. So what does preparing for a possible economic downturn look like for our listeners?
Well, for starters, it's always a good idea to take stock of your personal finances. Do you have an emergency fund set up? How much debt are you carrying? Could you handle it if your income suddenly dropped or you lost your job?
Those are definitely some tough questions to ask ourselves.
They are, but
Yeah.
it's like making sure your financial house is in order just in case a storm hits.
I like that analogy. But it's not just about battening down the hatches, right? Isn't it also about finding opportunities?
Absolutely. Economic shifts can create some really interesting opportunities, especially for people who are prepared and can adapt quickly.
So even in a downturn, there's a chance to not just survive, but actually thrive.
Definitely. It's about finding those pockets of resilience and figuring out what's making them successful.
And this is where Van Meter's video has this really cool example. He talks about Sky Quarry, which is a company that recycles asphalt shingles. And he's really bullish on their prospects, even if the economy takes a hit.
That's a great example. Sky Quarry is doing two things that are really important right now: reducing waste and finding sustainable building materials.
And those are trends that are likely to keep growing no matter what happens with the economy. It just goes to show you that even when things look bad, there are always going to be companies and whole sectors that find ways to not just survive, but really do well.
Yeah, that's a good point. And it also highlights how important critical thinking and research are. It's not about blindly following headlines or getting caught up in hype.
So do your own homework, basically.
Exactly. You need to understand the trends and the forces that are at play, and then make smart decisions based on your own assessment of the situation.
Knowledge is power. So for our listeners who are trying to navigate this potentially turbulent economy, what are the key takeaways? What should they be paying attention to?
Well, one of the big messages that really hit home for me from both of these sources is how important it is to understand the big picture. It's not enough to just look at individual pieces of data or isolated events. You need to connect the dots.
See the patterns.
Exactly. And understand what's really driving the global economy.
It's like putting a puzzle together.
Yes. You can't just focus on one piece. You have to see how it all fits together. And that's how you have those aha moments, those moments of clarity when you suddenly see the bigger picture.
I love those moments.
Me too. And this brings us back to China and their potential crisis. What the Eurodollar University video argues is that China's problems aren't just China's problems. They're symptoms of a global economic system that's become increasingly fragile and unbalanced.
So it's not just about what's happening inside of China. It's about how those issues are connected to the health of the global economy as a whole.
That's right.
Why is China so important in all of this?
Well, think about it. It's the world's second largest economy. It's a major trading partner for so many countries. And it's a manufacturing powerhouse. A slowdown in China can have a ripple effect that impacts businesses and consumers all over the world.
It's like a huge game of economic Jenga. Pull out the wrong piece, and the whole thing could come crashing down.
It's a good analogy.
And the Eurodollar University video goes even further. They suggest that China's reliance on government stimulus to prop up its economy might actually be making this global imbalance worse.
How so?
Well, they say it creates what they call a debt trap, where countries become more and more indebted just to maintain these unsustainable levels of growth.
It's like running on a treadmill. You're putting in so much effort, but you're not actually getting anywhere.
Exactly. And eventually, you just get exhausted. This brings up a huge question. Is there even a sustainable path forward? Can we create a global economy that's more balanced, more resilient, and less dependent on debt-fueled growth?
That's the million-dollar question.
And unfortunately, we don't have all the answers here on the Financial Evangelist podcast.
No, we don't.
But what we can do is give you the information and insights you need to ask the right questions and make informed decisions for yourselves.
Exactly. By understanding the challenges and how interconnected the global economy is, maybe we can start to imagine a more sustainable and prosperous future for everyone.
That's a great point. So just to recap, we've talked about what's happening in China, the potential for a global slowdown, and how important it is to understand the big picture. There's a lot to be conscious about, but also a lot of opportunity for those who are prepared and can adapt. Keep an eye on those economic indicators, folks, because things could get interesting. As always, thanks for listening to the Financial Evangelist podcast. Make sure you subscribe so you don't miss our next deep dive into the world of finance.
It really is a lose-lose situation. Prices keep rising, but the economy isn't growing. It's like super tough for businesses to thrive.
Yeah.
And for consumers, well, their purchasing power just gets eroded.
It's a scary thought, and what I find really interesting is that both of these sources, even though they're focused on different regions, China and the U.S., they're both highlighting some pretty similar themes. Anxieties about a potential global recession, concerns about how effective those traditional stimulus measures really are, and this underlying weakness in global demand.
Yeah, it's definitely a recurring theme, and it kind of brings us to another important point that I think both sources touched on: the psychological impact of all this uncertainty. When CEOs start getting nervous and consumers become cautious and everyone's just kind of, waiting for the other shoe to drop, it can actually turn into a self-fulfilling prophecy.
It's true. It's like that old saying, markets can remain irrational longer than you can remain solvent. It's a good reminder that fear itself can be a powerful economic force, and it can really lead to a standstill in decision-making and a further slowdown in economic activity. So, given all of this, where does this leave us? Are we all headed for economic doom and gloom?
Not necessarily. I mean, we have to remember that economic forecasts aren't crystal balls. They're not foolproof. And while these indicators are definitely concerning, they don't necessarily guarantee a recession is going to happen.
Okay, so there's still some hope.
Yeah, but it's still crucial to be aware of the risks and to be prepared, just in case things do take a turn for the worse.
That's a good point. Preparation is key, especially in uncertain times. So what would preparing for a potential economic downturn actually look like for our listeners?
Well, for starters, it's always a smart move to take a look at your personal finances. Do a checkup. Do you have an emergency fund? Are you comfortable with your current debt levels? Could you weather a period of, say, reduced income or even job loss?
Those are some tough but important questions we all need to ask ourselves.
Exactly. It's like making sure your financial house is in order before a storm hits.
I like that analogy.
Yeah.
But it's not just about battening down the hatches, is it? It's also about being on the lookout for new opportunities that might pop up during a downturn.
Absolutely. Economic shifts often create new possibilities, especially for those who are prepared to adapt and capitalize on them.
So it's not just about surviving, it's about finding ways to thrive even when things are tough.
Precisely. It's about identifying those pockets of resilience and innovation and understanding what makes them successful.
Speaking of which, the Van Meter video had this really interesting example that illustrates this point. He talked about Sky Quarry, a company that recycles asphalt shingles. And he seemed really optimistic about their prospects, even in a potentially shaky economic climate.
Yeah, I found that example fascinating too. It really shows how innovation and sustainability can create opportunities even in the midst of economic uncertainty. Sky Quarry is addressing two really pressing needs: reducing waste and providing sustainable building materials.
And those are trends that are likely to keep growing, regardless of what's happening in the broader economy. It's a good reminder that even when things look a bit bleak, there are always companies and sectors that are finding ways to not only survive, but actually thrive. It's about identifying those bright spots and figuring out why they're succeeding.
Exactly. And that's where critical thinking and research become really important. It's not about blindly following headlines or getting caught up in market hype. It's about doing your own due diligence.
Right, doing your homework.
Understanding the underlying trends and forces that are at play, and then making informed decisions based on your own assessment of the situation.
Knowledge is power. So for our listeners, what are some of the key takeaways from all of this? What should they be paying attention to as they try to navigate this potentially turbulent economic landscape?
Well, one of the key messages that really resonated with me from both of these sources is the importance of understanding the bigger picture. It's not enough to just focus on individual data points or events that seem isolated. You really need to connect the dots, see the pattern.
Put the pieces of the puzzle together.
Exactly, and understand the underlying forces that are shaping the global economy.
It's like trying to solve a mystery.
Yes, and this brings us back to the issue of China and its potential crisis. What the Eurodollar University video argues is that China's problems aren't just China's problems. They're symptoms of a much larger issue, a global economic system that has become increasingly fragile and unbalanced.
It's not just about China's own internal issues. It's about how those issues are tied to the health of the global economy. Why is China so crucial to this big, interconnected economic web?
Well, think of it this way. China is the world's second largest economy. It's a huge trading partner for tons of countries, and it's a massive manufacturing hub. It produces a vast amount of goods that flow through all these global supply chains. So any slowdown in China, even a small one, has the potential to create a ripple effect. That impact could be felt by businesses and consumers all over the world.
Like a giant Jenga tower.
Yeah.
You pull out the wrong block and the whole thing comes crashing down. In the Eurodollar University video, they actually take this idea a step further. They suggest that China's reliance on government stimulus to keep its economy afloat might be contributing to this global imbalance.
How so?
Well, they argue that it creates this debt trap. Countries become more and more indebted just to try and maintain these levels of growth that are probably not even sustainable.
It's like you're running on a treadmill, right? You're putting in all this effort, but you're not really going anywhere.
Exactly. And eventually you just run out of steam.
Yeah.
So this brings up a really big question. Is there a sustainable path forward? Can we create a global economy that's more balanced, more resilient, and less reliant on growth that's fueled by debt?
That's the million-dollar question, isn't it?
It really is. And unfortunately, we don't have all the answers here on the Financial Evangelist podcast.
No, we don't.
But what we can do is give you the information and the insights you need to start asking the right questions and to help you make informed decisions for yourselves.
Exactly. By understanding the challenges and seeing how interconnected the global economy really is, well, maybe we can start to envision a better future for everyone. A future that's more sustainable and more prosperous.
I like that. That's a great point. So to wrap things up, we've talked about what's going on in China. We've explored the possibility of a global slowdown, and we've emphasized how important it is to understand the bigger picture, to see how it all connects. There's definitely a lot to be cautious about, but there are also opportunities out there, especially for those who are prepared and willing to adapt. Keep a close eye on those economic indicators, folks, because things could get really interesting. As always, thanks for tuning in to the Financial Evangelist podcast. Make sure you subscribe so you don't miss our next deep dive into the world of finance.
Tired of spending countless hours sorting through your crypto transactions? Meet Coinly, your all-in-one crypto tax solution. Whether you're trading, staking, or mining, Coinly automatically imports and categorizes your transactions from over 700 exchanges and wallets. Generate accurate tax reports in minutes, track your portfolio performance, and stay compliant with your local tax authorities. Coinly supports tax regulations in more than 20 countries, making crypto tax season stress-free for investors worldwide. Join over 1 million users who trust Coinly with their crypto taxes. Visit the link in the description to get started today and receive 20% off your first tax report.